Government funding through the Private Finance Initiative, or PFI, means the UK now has hundreds of schools, hospitals and even museums it may not have had otherwise. But critics of this form of public borrowing from the private sector say that although legal, it's created a huge money-making machine that pays little tax. Well, this programme has learnt that 5 offshore companies who were granted PFI contracts paid no corporation tax during a 5-year period in which they made nearly £2 billion in profit. Our reporter Andrew Hosken has been investigating.
Good, so maths is a measure of the, let's say, stuff inside something.
Pupils at the Lister Community School in East London are learning about maths and matter.
Not quite, Mr.
The physical stuff that you can touch or feel.
Excellent. So matter...
Science teacher Owen Hutchings teaches some of the most diverse classrooms in the country.
So matter is the stuff inside.
Lister has 1,350 students and they come from a wide range of different backgrounds with probably over 100 different home languages spoken.
Over 100, that's amazing.
Head teacher Anthony Wilson showed me around the school, which is in Plaistow in the East London borough of Newham.
Large numbers of students from Eastern Europe.
The school building itself was completed 7 years ago at a cost of £24 million. It was financed and built by a private company through PFI, the so-called Private Finance Initiative. Now that money has to be paid back.
So, looking for each weapon, I want the advantages and the disadvantages of using that.
But the school says that Newham Council, which co-signed the deal, has effectively broken the agreement about how much the school should pay towards paying off the debt. Head teacher Anthony Wilson says the council is demanding that the school pay substantially more than he believes was originally agreed.
The positive side was that out of that we got a brand new building, which has been a really positive thing for us. The big problem for us at the moment is that having signed up to a deal, the local authority, which administers PFI, which negotiated the contracts and which is in the driving seat for all of this, has decided to substantially increase our contribution.
By how much?
By around £400,000. They have changed the figures a few times.
Per year?
Yes, £400,000 per year, which would make a very big difference to us. Like any school, the vast majority of our expenditure is on staff. So if you increase the cost on premises, then we are going to have to reduce the number of staff.
In a statement, Newham Council insisted that Lister School was misrepresenting the core of the dispute, adding that both the school and the council have agreed in principle to appoint an independent expert to determine the matter. Meanwhile, the school says it's had to put its future plans on hold.
We are working with 2 other local schools. Lister, Rokeby and Sarah Burnell want to form the Newham Community Schools Trust because we're committed to working together, and all 3 schools have rising standards and are already collaborating and doing good things. But we could do much more, and we would have more opportunities to support our young people and develop that project as a multi-academy trust. That's been held up for 2.5 years now because of the local authority not agreeing to the PFI settlement.
There's no question about who's in charge at Lister School, but ownership of the actual buildings is a different issue altogether. This is because the original PFI company set up to finance and build the school has subsequently sold most of the equity onto a fund based offshore in Guernsey. Increasingly, more and more of our schools, hospitals and care centres are being sold to huge offshore companies that pay little or no tax to Her Majesty's Revenue and Customs.
What it shows is that there's an awful lot of scamming and profiteering going on.
From his home in Southern Ireland, Dexter Whitfield runs the European Services Strategy Unit, which for more than 20 years has investigated PFI deals for public sector bodies and other organisations. He says that just 12 offshore funds have acquired equity in nearly 3/4 of the 735 current PFI projects, and that 9 companies own at least half of the equity in nearly half of all PFI projects.
PFI is essentially a private sector profit machine that if the government adopted a strategy of building public infrastructure directly through public investment and operating it through in-house services, this whole edifice would not exist. So, it is a profit-making machine. All these transactions are a product of the way in which there was so much money in PFI that they can all afford to buy and sell and trade and to build new infrastructure funds offshore, for those infrastructure funds to make significant profits, not to pay any tax. This is all at the expense of the basic PFI model.
Well, I'm back in the office and I'm looking at a table of 5 offshore PFI companies. The document shows the total profits they made over the 5 financial years from 2011 to 2015, as well as the amount of corporation tax they paid in that time based on the company's own annual reports. Now, it says that the 5 funds made a total profit of around £1.8 billion but paid little or no corporation tax. But, and it's a big but, the overall tax situation is being strongly disputed by one of the 5 companies, which told us the table does not take into account the tax paid by subsidiaries, many of which are UK-based, or the tax paid by shareholders on their dividends.
The company is HICL Infrastructure Limited. Based in Guernsey, HICL now owns 80% of the PFI project that includes Lister School in Newham. A company spokesman said there'd been a misreading of the financial information by the think tank run by Dexter Whitfield. HICL also added that all of their PFI projects were also taxed in their country of residence.
I don't care who builds them, so long as they're on cost, on budget and helping to deliver a better health service.
At the 2002 Labour Party conference, Tony Blair made clear his support for PFI.
1979 and 1997. All those 18 years, 10 new hospitals were built. Through PFI since 1997, 15 have been built, 100 on the way.
PFI began in earnest under the Conservatives and continues under them. For governments, there was the added attraction that PFI was technically off the books, so officially it wasn't counted as part of the country's debt. But Labour now believes it's poor value for money and has pledged to bring existing PFI projects back in-house through a programme of nationalisation. But is this possible when so much current ownership is offshore? Vivek Kotecha is a researcher with the independent non-party think tank, the Centre for Health and the Public Interest.
By Act of Parliament, they could in theory nationalise it, and if there was enough political support, maybe that is feasible. I don't know if it'd be wise in the sense that it would deter future public-private contracts, and so there is a huge issue about if we do not want to have any private sector involvement in our state infrastructure ever again, then maybe it will work and it will have no implications, but the kind of the second order effect of this would be spooking the whole market, and I don't think that's wise.
Regardless of actual ownership of public assets, the PFI bill, currently standing at around £170 billion, is causing severe financial headaches across public services.
But you can always double-check with the doctor if you need to.
In the Macmillan Centre in central London, patients are receiving chemotherapy treatment. It's run by UCLH, the University London College Hospitals NHS Foundation Trust. The Trust believes its current PFI bill is far too high and hopes the NHS will help it restructure the debt. Professor Marcel Levy is UCLH Chief Executive.
I think it's fair to say we now pay about £30 million every year for this PFI scheme. That's partly interest, partly repaying the debt, but at a rate which is so much higher because the interest rates are so low for the past few years that if we would actually terminate this scheme and refinance the loan in an ordinary public sector way, we would pay probably an enormous amount of money less than we pay now. We may say even a reduction of 50% or more.
UCLH is not the only public body looking to escape its PFI contract for a better deal. Meanwhile, offshore companies will continue to look for big profits on their investments. And at the moment, that means buying up Britain.
And that was Andrew Hosken reporting. We're listening to that in our radio car is a Labour MP, Maggie Hillier, who's chair of the Public Accounts Committee. Listening to that, Meg Hillier, how concerned are you at PFI companies who transfer equity to offshore companies and little or no corporate tax seems to be being paid?
Well, frankly, it is shocking that our taxes are paying for our schools and hospitals and that public infrastructure, and yet these companies are clearly profiting and paying no UK tax. And I don't think this was ever envisaged when PFI was established.
How did it get to this, do you think?
Well, look, I think when PFI was established, as you heard that clip from Tony Blair, there was a great impatience when the government came in to try and build new hospitals and schools, and this was seen as a good vehicle. Some of those early deals weren't good, particularly the early ones. But I think nobody foresaw this purchasing and sale of the debt, if you like, on to companies. And this conglomeration now, that is buying up. So there's some few companies owning a large amount of the debt is a big concern. Though, of course, in reality, for those having to pay it off, the hospital the Macmillan Centre you just featured, they're still having to pay the debt at the same rate. So it probably doesn't affect them day to day. But I think, we are really clear. The committee that I chair has been pushing harder for the government to tackle some of these offshore arrangements. And it is not acceptable that companies effectively owning the infrastructure that we pay our taxes to run are just not paying any UK tax from what you've shown me.
And what about that other issue you highlight there, the fact that there are so few hands in which these contracts are held?
Well, I mean, this is, an example of how the sector has altered, that people have been selling on the debt. So when it's got, the original companies were supposed to have a relationship at least, even if it was an expensive one, with the organisation that they were providing. So, that you'd have a maintenance contract with a known contractor. These have just been sold as a cash cow, it's just a money transfer. And it goes a very long way from what the original intention was, which was to use, yes, private money, but every government's used private arrangements over the years, but to make sure that we could build public services. Now we've got a very big gap between the owner of the debt and the service and organisation paying for it with our tax money.
So what can be done? Labour announced at the party conference that you wanted to nationalise PFI deals, but given how much of this money is being held offshore, doesn't that complicate things? Doesn't it make the chances of that even more remote?
Well, certainly I can imagine these companies will dig in very hard, and there'll be legal challenges. And John McDonnell's been very clear that, of course, we're not in government now. By the time we were to get in government, some of these would have already run to an end, and he will have to make a judgment as Chancellor about how quickly we do this and what the priorities are for any Labour government. So he will have to look very closely. I know, is already preparing, in this way, looking to see what can be done to buy out of these deals. But one of the things that needs to be looked at is, could they be even if we can't buy out immediately everything, could we refinance them so that the day-to-day costs for hospitals and schools decreases? If you look at some of our hospitals, they're paying an awful lot. Staffing and the repayments of PFI taking a very large chunk out of the day-to-day funding, which is really hitting them hard.
And what about the priorities for your committee? Will you be looking into some of the issues raised in Andrew's report?
We certainly keep a very close eye on what's happening with offshore things. We've been looking, we had a global tax conference last year, and one of the things that makes these appealing for bodies is that the offshore arrangements exist, so they can reduce their tax bill in the UK. We held a conference a year ago, an international tax conference, where we've got parliamentarians across the world to sign up to pressurise our governments to be more bold about tackling offshore tax arrangements. And I think that's really got to be part of it. We've got to have an international approach to this. It doesn't work if we just do it unilaterally.
Maggie Hillier, Labour MP, Chair of the Public Accounts Committee, thanks very much.